High inflation sucks. Big time. So many people are stuck paying more for basic necessities, and they have few options. In my previous video, I talked about why I am not concerned about high inflation. The big solution that I talked about for combating high inflation was owning and investing in dividend stocks that have a dividend growth rate that exceeds the inflation rate. And as I mentioned previously, it's not that difficult to do. In this video, I'm going to share with you a number of different dividend stocks that might be a great solution for high inflation and be a great fit for your portfolio depending on what you're trying to accomplish. These are my favorite dividend stocks to counter high inflation. Let's do it. Alright guys, let's not waste any time. Let's dive right into the spreadsheet. This is my monthly dividend stock spreadsheet, which is available if you're a member of the Patreon community. The Patreon community is a major benefit for you guys if you're a new dividend investor or one that's just trying to up your game and up your education. In addition to getting access to all the trades that I make in my own portfolio, the rationale behind why I do it, you also have access to a private Discord community to communicate with other members of the Average Joe Patreon community and learn what other people are doing, other ideas that they have, and get to know other like-minded dividend investors. Lastly, I'm in the final stages here of getting my live stream launched. It's going to happen every single week where we can come together, talk about the week of investing, talk about your biggest questions that you have in your own portfolio, and everything in between. If you think you'd find some value in that, check out the link down in the description below. All right, so we're in the dividend stock spreadsheet here. Now, as we talked about, the big goal when it comes to combating high inflation is to utilize the dividend growth rate. As you can see right here in columns I, J, K, and L, the 1, 3, 5, and 10-year growth rates. We've got our dividend streaks here and the dividend tier that it's in based on that dividend streak. Prices as of May 9th, the 1, 3, 5, and 10-year growth rate, dividend yield currently based on that price, and the average 5-year dividend yield here. This variance here gives you an idea of whether this stock is currently on discount based on its historical yield or if it's trading at a premium. Then we've got our payout ratio based on free cash flow and our annual dividend. Now what we want to do is we want to isolate the dividend stocks that have a dividend growth rate on the 1, 3, and 5-year growth rate at a minimum that have a dividend growth rate here of at least 5%. Now I know inflation is higher than that right now, around 7, 8%, and some would argue that it's even higher than that right now. The non-government recorded actual inflation is much higher than that. And, you know, that's not something that's likely to be there for a long time, but you could, in theory, not in theory, you could actually do it right now. You could find dividend stocks with dividend growth rate that exceed even right now 7, 8, 9, 10%, even as high as 15 or 20%. Now, that 15 to 20% dividend growth rate is not sustainable for the long term. You might see something more realistically between 5 and 10% long term, but you can still find it in the short term. So first look here, we're going to take a look at dividend stocks that meet that 1, 3, and 5-year dividend growth rate of at least 5% and have a payout ratio based on free cash flow of less than 85%. Because we want to make sure that not only is the dividend safe and not at danger or risk of being cut, we also want to make sure that there's room for the dividend to grow in the future even more. This first look here will be just dividend challengers, which is going to be dividend stocks that have been paying dividends for at least 5 years but less than 10. Now this might not be the perfect fit for you because you want a little bit more stability with respect to how many years they've been paying increasing dividends. I understand that, but you are almost guaranteed to get better dividend growth rates this way. So let's take a look. All right guys, here are 6 different dividend stocks that I think you might really like here. Now we've got Manulife Financial Corporation, MFC, that's in my own portfolio FYI, Central Pacific Financial Corporation, Next Era Energy Partners, Medifast, Triton International, and Atlantica Yield. Got a number of different sectors. We've got financials, utilities, consumer staples, industrials. So look at these dividend growth rates here. We've got consistently, especially on the 3 and the 5-year growth rates, we've got 7 and 19 here when we're looking at Atlantica Yield. We've got 10.5 and 10.9 for Manulife. We've got 5, 6, and 9.8, 15 and 15, 16 and 22, and then 34 and 38 for Medifast. Now granted, Medifast only has a 7-year streak on their dividend, but still, these are great dividend growth rates and a great way to beat inflation. Can we expect this dividend growth rate to come down? Yeah, I think so. But right now it's great, and we've got a dividend yield of 3.61%, and it's currently on discount based on its 5-year historical dividend yield. Now Triton, right here you can see TRTN, this one's actually trading at a premium given its historical dividend yield. Historically 5.62, currently at 4.15%. And you can see all the payout ratios based on free cash flow are all in the green, very healthy. I mean, Manulife's only at 10% right here. These are some basic examples, guys, of dividend stocks that are still kind of young, but they have great dividend growth rates and great dividend yields. Might be a great fit for you, but I understand if you want something with a little bit more stability, a long-term track record of dividend growing every single year. So let's take a look at those. All right, so here are the non-dividend challengers, meaning that every single dividend stock on this list has been paying dividends for at least 10 consecutive years, which is what I was talking about in my previous video. Some of these have been paying dividends for as many as, well, let me just show you here. Dividend champions, at least 25 years. Here we've got as high as 50 years right here. We've got 36, 27, 27, 26, 26. Every single year raising the dividend for this many years is pretty historic growth. We've got great dividend stability and we've got really awesome dividend growth rates here. Now, let me go ahead and just sort this based on the dividend yield so we can, and then we'll take a look at the companies. All right, so we've got Arbor Realty Trust, Delic Logistics, Northwest Bankshares, Enbridge, the First of Long Island Corporation, Best Buy, T. Rowe Price Group, RGC Resources, AbbVie, Brookfield Infrastructure, New Jersey Resources, BlackRock, Bank of the Ozark, Broadcom, and Texas Instruments. All dividend growth rates are at least 5%. Now, some of them are a little lower, right? We got 5, 6, 7, and 6 here for First of Long Island Corporation, which is in my portfolio. For full disclosure, Arbor Realty, Delic Logistics, Northwest Bankshares, Enbridge, First of Long Island, AbbVie right here, and Broadcom. All of them are in my dividend portfolio right now. If we sort here by 5-year dividend growth rate, look what we got here. We got Broadcom leading the way here. Great dividend growth rates, a little bit lower here on the 1 year, and it's been slowly declining, but still great dividend growth. Best Buy, really strong here, 20 or 26.8 for the 1 year, then 17, then 20, currently yielding 3.85%. We've got AbbVie, a dividend champion, currently yielding 3.69%, which is trading at a premium for sure, because historically we've been closer to 4.24%, but these strong dividend growth rates make it a quality dividend stock. Arbor Realty is currently yielding 8.53% and growing its dividend every single year by this much. This is great. Now, you'll notice on the payout ratio, some of these here are in the red. To be fully transparent, free cash flow is a great measure for dividend safety, but it doesn't always capture everything we need when it comes to certain types of industries in the economy, including utilities, and when we're talking about energy, just because of the mere fact that there's a lot more capital that needs to be allocated to maintain a lot of the assets in the business. So there are different measures of that dividend payout ratio that we look at. I just didn't have time to build that here into this review. If we sort here by dividend yield, we've got 8.53 currently for Arbor Realty, Delic Logistics at 7.78%, Northwest Bankshares at 6.48%, we've got Enbridge at 5.95%, and we've also got First of Long Island at 4.45%, trading at a major discount. Now you can see here, based on the discount or not, that if you look at the variance, the most expensive stock here is actually Delic Logistics. The average 5-year yield is 15%, currently at 7.78%. Whereas if we look at the best discounts on this list, we can see that the best one here is definitely Northwest Bankshares, trading at a 1.38% discount of its average historical dividend yield. Also, Best Buy is trading at a discount, so is T. Rowe Price Group. And then we've also got First of Long Island and RGC, both trading at discounts. When I pick dividend stocks for my own portfolio, one of the biggest things I look at is dividend growth. Yes, I do have a high yield dividend portfolio, and in that case, the dividend growth rate is not quite as important, but I still try to prioritize it if I can. Remember that when it comes to inflation, guys, one of the best ways we can attack that as a dividend investor is by picking up dividend stocks with a dividend growth rate exceeding the long-term historical inflation rate. But even in trying times like this, when we have really high inflation, we can pick up dividend stocks with dividend growth rates that exceed even those numbers, 15, 20, 25%. We don't expect those dividend growth rates to sustain for the long term. It's just not realistic, but we can still pick up long-term dividend growth rates between 5 and 10 to 12%. In my next video, we're gonna walk through from start to finish all the steps I take to look at what dividend stocks I'm going to use to sell call options. We're even going to go into my own portfolio, into my Fidelity brokerage account, and we're going to sell a call option so you can see just all the metrics that go into it. Make sure to leave your 2 cents down in the comments below, guys. I do my very best to respond to all comments that I get on the day I post a video. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.